Across Texas, entire cities are emptying out fast. Once booming towns are now plagued by collapsing economies and vanishing job markets, leaving neighborhoods deserted and homes worthless. In this video, we're counting down the 15 Texas cities people are abandoning in 2025 and the surprising reasons behind the mass abandonment. Laredo was once one of Texas's fastest-growing border cities, fueled by international trade and a booming logistics sector. In 2020, the city had about 262,000 residents, but by 2025, that number has fallen below 250,000. What's driving this decline? A combination of economic instability, affordability issues, and safety concerns. For decades, Laredo thrived because of its location along the U.S.-Mexico border. Trucking, warehousing, and cross-border commerce created steady jobs. But recent changes in trade policy, automation, and a slowdown in freight demand have slashed opportunities. Thousands of workers left the industry, and many moved to larger Texas metros for better-paying jobs. The median household income in Laredo hovers around $54,000, well below the state average, yet housing costs haven't dropped as much as wages. The median home price now sits near $230,000. That might sound reasonable compared to Austin or Dallas, but when you factor in stagnant incomes and rising property taxes, many families are priced out. Safety is another growing concern. Laredo has one of the highest violent crime rates in Texas, and gang activity tied to drug trafficking has put pressure on local law enforcement. Families who once felt secure are now moving to suburbs or even out of state. Climate challenges only add to the exodus. Extreme heat and worsening drought conditions have driven up water bills and strained infrastructure. Even downtown revitalization projects and retail expansions haven't been enough to reverse the population decline. Once a city on the rise, Laredo now faces a harsh reality. Fewer jobs, higher living costs, and safety worries are pushing residents away, making it one of the emptiest cities in Texas in 2025. Galveston, known for its beaches and historic charm, was once one of Texas's most desirable coastal destinations. But in 2025, this island city is struggling to keep residents, and it's not hard to see why. Galveston's population, which hovered near 55,000 in 2020, has dipped below 50,000, and the trend is accelerating. The biggest problem? Climate risk. Galveston sits in a hurricane-prone zone, and recent storms have left homeowners with massive repair bills and soaring insurance costs. Flood insurance alone can cost thousands of dollars per year, making it nearly impossible for middle-class families to afford living here. Rising sea levels and beach erosion have also made some neighborhoods unlivable, further driving people inland. Housing prices tell the story. While the median home price is about $330,000, maintaining property here can be a financial nightmare. Utility bills are higher, insurance is skyrocketing, and some homeowners are simply walking away because they can't afford the upkeep. Tourism, once the backbone of the local economy, has also taken a hit. Seasonal businesses have struggled since the pandemic, and even though visitors return in the summer, it's not enough to sustain year-round jobs. Many workers have packed up for Houston or other inland cities with more stable opportunities. For anyone thinking about buying a home in Galveston in 2025, be prepared. The risk of flooding, insurance costs, and economic uncertainty make this one of the emptiest and riskiest cities in Texas right now. Wichita Falls, a city near the Texas-Oklahoma border, was once considered a stable, mid-sized community with a strong military presence thanks to Shepherd Air Force Base. But in 2025, this city is facing a slow but steady population decline, with numbers dropping from roughly 104,000 in 2020 to around 98,000 today. One of the biggest factors driving people out is economic stagnation. While the military base provides some stability, Wichita Falls lacks major industries outside of defense and healthcare. Job growth has been almost flat for years, and many young residents are leaving for larger cities like Dallas-Fort Worth in search of better opportunities. The local unemployment rate remains above the state average, and wages have failed to keep up with the rising cost of living. Housing might seem affordable on the surface. Median home prices hover around $170,000. But low demand means home values aren't appreciating. In fact, prices are beginning to stagnate, and some experts predict further decline as more people move away. Investors expecting quick returns could be in for a disappointment. Another challenge is infrastructure and amenities. The city's water supply has faced issues in the past, including severe droughts, which raise concerns about long-term sustainability. Entertainment, nightlife, and cultural options are limited compared to Texas's major metros, making Wichita Falls less appealing to younger generations. On top of that, the weather is another drawback. Summers are brutally hot, winters can be harsh, and severe storms are common. Combined with an aging population and a lack of economic diversification, Wichita Falls is on track to become even emptier over the next few years. For home buyers, that means this city is a risky bet. Values may remain flat or even fall further as the outflow continues. Beaumont, located in southeast Texas near the Louisiana border, was once an oil boom town with a strong industrial base. Today, it's becoming one of the most overlooked and increasingly empty cities in Texas. The population has slipped from about 118,000 in 2020 to under 113,000 in 2025, and that downward trend shows no signs of stopping. One of the major issues is the local economy. While refineries and petrochemical plants still dominate, these industries are increasingly automating jobs, leaving fewer opportunities for residents. Unlike cities like Houston or Austin, Beaumont has failed to diversify its economy, meaning there's little growth outside of energy. The median household income lags behind the state average, and combined with rising insurance costs due to storm risks, many families are moving elsewhere. And speaking of storms, Beaumont is highly vulnerable to hurricanes and flooding. Located near the Gulf Coast, this city has been hit hard by storms like Harvey, and the recovery has been slow. Many homeowners face skyrocketing flood insurance premiums, which makes owning a home here more expensive and less appealing. Properties in flood-prone areas are increasingly difficult to sell, which drives prices down even further. While home prices are relatively low, hovering around $160,000, the problem is demand. Investors and home buyers alike are hesitant because of Beaumont's long-term risks. Schools also struggle with underfunding, and crime rates remain a concern in several neighborhoods. Add in limited amenities and a lack of vibrant job markets, and it's easy to see why so many are packing up and leaving. If you're considering buying a home in Beaumont, think carefully. Low prices might look attractive, but declining demand and high climate risks make this city one of the worst bets for long-term property value in Texas. Odessa, a city in West Texas known for its oil-driven economy and Friday night football culture, is facing a population and housing demand problem that few expected. In 2020, Odessa had over 125,000 residents. By 2025, that number is closer to 118,000, and experts warn it could keep dropping. The biggest issue? Overdependence on oil and gas. Odessa's economy is almost entirely tied to the energy sector, which makes it highly vulnerable to oil price fluctuations. When oil prices dip, jobs vanish, and housing markets take a nosedive. That volatility has scared away not just families, but also investors who want stability. While median home prices sit at about $190,000, well below Texas's statewide average, those homes can sit on the market for months because buyers are hesitant about the city's economic future. The city also struggles to attract major employers outside of energy. This lack of diversification means Odessa offers limited opportunities for young professionals or remote workers, who instead flock to thriving Texas metros like Austin, Dallas, or San Antonio. Low home prices might look tempting, but Odessa is a classic boom and bust market. With declining population and zero signs of economic diversification, this is one city you'll want to think twice about before buying property in 2025. Lubbock, often called the hub city of West Texas, is known for Texas Tech University, college football, and its strong agricultural roots. But despite its reputation as a growing college town, Lubbock is struggling in 2025, and its housing market is starting to show signs of weakness. The city's population peaked around 263,000 a few years ago, but growth has slowed significantly. Why? One reason is the job market. Lubbock has a relatively small economy beyond education and healthcare. While Texas Tech provides stability, there isn't much in terms of high-paying career opportunities for graduates or new families. Many college students leave right after graduation, taking their spending power and housing demand with them. Housing costs in Lubbock remain affordable, with median home prices around $190,000, but affordability alone isn't enough to keep the market strong. Inventory is increasing because more people are moving to larger metros like Dallas or Austin for better job prospects. That extra supply is putting downward pressure on home prices. Crime and poverty are also concerns. Certain neighborhoods have seen rising crime rates, and poverty levels remain above the state average. Public schools face mixed ratings, which pushes many families to reconsider staying in the area. In short, Lubbock may seem like an affordable, family-friendly city, but the lack of economic growth and limited opportunities are pushing residents to move elsewhere, leaving an empty city behind. Brownsville, located at the southern tip of Texas on the U.S.-Mexico border, faces a challenging future as one of the state's emptiest cities heading into 2025. While its population once hovered near 183,000, recent years have seen a slow but steady decline as residents leave in search of better opportunities elsewhere. The city's economic struggles are a major factor behind this trend. Brownsville's economy relies heavily on trade and manufacturing, but these sectors have been hit hard by shifting global markets and increasing automation. Job growth has been sluggish, and many locals find themselves underemployed or forced to accept low wages. Without diverse, high-paying employment options, it's difficult to retain younger generations or attract new residents. This economic uncertainty has spilled over into the housing market. Although homes remain affordable with median prices around $155,000, demand is soft. Properties often stay on the market for long periods, reflecting buyer hesitation amid the city's uncertain outlook. New housing developments are scarce, and the slow turnover contributes to an overall feeling of stagnation. Combined, these factors make Brownsville a city where many are opting to leave rather than settle, contributing to a shrinking population and a housing market that struggles to rebound. Without substantial investment and economic diversification, Brownsville is likely to remain one of Texas's emptiest cities in 2025, hardly a place where homebuyers are eager to invest. Killeen, home to the massive Fort Cavazos, has long been known as a military town. For years, its economy relied heavily on the base and the soldiers and families stationed there. While this created steady demand for housing, that stability is starting to crumble in 2025. One of the biggest problems is market oversupply. During the pandemic boom, developers rushed to build homes in Killeen to meet military housing demand and attract out-of-state buyers looking for cheap property. But now interest rates are higher, and those speculative buyers are gone. This has left Killeen with too many homes and not enough buyers, causing prices to stagnate or drop. The median home price in Killeen is still relatively low, around $220,000, but that doesn't tell the full story. Homes are sitting on the market for months, and sellers are cutting prices by tens of thousands just to get an offer. Rent prices are also slipping, which is bad news for investors who once viewed Killeen as a safe bet. Another major issue is economic concentration. Killeen depends so heavily on the military that when deployment cycles change or military budgets tighten, the entire local economy feels the impact. Outside of defense, there's very little industry here, meaning job growth is minimal. Many residents commute to nearby cities like Austin or Temple for better opportunities, but even Austin's job market has cooled compared to its boom years. Add to that crime concerns and underfunded public services, and Killeen's appeal fades quickly. Schools rank below average, infrastructure is aging, and property crime rates are higher than the state average. Combined with an oversaturated housing market, this all points to further price drops and a possible mass exodus in the near future. Harlingen, located in the Rio Grande Valley near the Mexican border, has long been known for its affordability. For years, it attracted retirees looking for cheap living and mild winters. But in 2025, that affordability advantage is shrinking fast, and Harlingen is facing serious housing market problems that make it one of the worst places to buy a home this year. The biggest issue is a weak local economy. Harlingen doesn't have the corporate presence or high-paying jobs that drive housing demand. Instead, it relies on agriculture, small businesses, and retail. These sectors have been hit hard by inflation and supply chain disruptions, causing job growth to stall. With limited employment opportunities, younger residents are leaving for bigger cities like San Antonio or Houston, leaving behind an aging population that doesn't drive housing demand. Despite being one of the cheapest cities in Texas, with a median home price near $180,000, Harlingen is struggling with falling demand and high poverty rates. Nearly 30% of residents live below the poverty line, making it one of the poorest cities in the state. That lack of disposable income means fewer qualified buyers and more foreclosures as interest rates squeeze struggling households. Harlingen also sits in a low-lying area prone to flooding during heavy storms and hurricanes. Like many other cities in the area, insurance costs have skyrocketed in recent years, making home ownership even more expensive. For investors hoping to cash in on rental properties, that risk factor, combined with a limited pool of renters who can afford rising rents, makes Harlingen a dangerous bet. It's easy to see why Harlingen's housing market is heading in the wrong direction for 2025. San Angelo, often called the gateway to West Texas, has been known for its ranching heritage and strong military presence thanks to Goodfellow Air Force Base. For decades, the city offered a stable housing market and affordable living. But in 2025, that stability is starting to crumble, and San Angelo now ranks among the Texas cities where home prices are likely to fall. The biggest reason is economic stagnation. San Angelo's economy relies heavily on government and military employment, healthcare, and oil-related industries. But as oil prices fluctuate and remote work reshapes the workforce, demand for housing in smaller cities like San Angelo has started to decline. The median home price sits around $215,000, which may sound affordable, but when job growth slows and population numbers stagnate, even that price becomes too high for many locals. Another factor is migration trends. Younger families and professionals are moving toward larger cities such as Austin, Dallas, and San Antonio, where there are more job opportunities and amenities. Meanwhile, San Angelo isn't attracting enough new residents to replace the outflow, which is leaving neighborhoods with more for sale signs than buyers. For investors, the rental market isn't much better. Vacancy rates have increased and rent growth is nearly flat, meaning the city doesn't offer the returns it once did. Unless San Angelo finds a way to diversify its economy and attract new residents, home prices are likely to keep dropping in 2025. Tyler, often called the Rose Capital of America, has long been considered one of East Texas's most charming cities. Known for its lush gardens, vibrant medical sector, and proximity to Dallas, it once attracted families looking for affordability and small-town appeal. But in 2025, Tyler is showing signs of trouble, making it one of the Texas cities where housing prices are likely to slide. The first red flag is overinflated housing costs compared to income levels. During the 2020 housing boom, prices in Tyler jumped by more than 35%. The current median home price is hovering near $260,000, which might not sound bad next to Austin or Dallas, but the city's median household income is only around $60,000. That gap makes affordability a growing issue, and with mortgage rates still high, the buyer pool is shrinking. Another problem is slowing job growth. Tyler's economy leans heavily on healthcare, education, and local retail, but these sectors aren't expanding fast enough to keep up with housing inventory. There are fewer large employers moving into the area compared to cities like Frisco or Round Rock, which means less demand for new housing. The population trend is also shifting. While Tyler experienced a surge during the pandemic when people fled big cities, many of those buyers are now selling because they're being called back to corporate offices in larger metros. This creates an oversupply of homes and drives prices downward. If Tyler can't attract new businesses and diversify its economy, 2025 could be the year its housing market faces a major correction. Abilene, located in west central Texas, has always been known as a military town with a strong community feel. It's home to Dyess Air Force Base, several universities, bonds, and a historically affordable housing market. For years, families moved to Abilene to escape the high costs of Dallas and Austin. But in 2025, the city's housing market is showing cracks, and home prices could take a hit. The main issue? Stagnant job growth and limited economic diversity. While the military base provides some stability, it doesn't drive large-scale job creation. Many of Abilene's private sector jobs are in education, healthcare, and local retail, industries that don't offer big salary increases. Meanwhile, housing prices surged during the pandemic as investors swooped in, pushing the median home price to nearly $220,000. For a city with a median household income under $60,000, affordability is becoming a major problem. Another factor is population stagnation. Abilene saw a small bump during the remote work boom, but that trend has reversed. As companies demand workers return to office settings in larger metros, many of those who relocated are selling their homes. That's creating excess inventory in the market, which could push prices down in the coming months. Infrastructure is another concern. Abilene's roads and utilities are aging, and the city lacks major public transportation options. Additionally, the water supply system has faced stress during recent droughts, raising concerns about long-term sustainability. Abilene's slow but steady population loss and underwhelming housing market firmly place it among Texas's emptiest cities in 2025, places where homebuyers are wary and few want to settle. Without significant economic revitalization and community investment, Abilene looks set to continue shrinking, making it a risky choice for anyone considering buying a home there. Midland, often called the oil capital of West Texas, has long been a boomtown for the energy industry. When oil prices soar, so does Midland's economy, attracting thousands of workers and driving up home values. But in 2025, the city is facing a different reality, and it's not good news for homeowners. The housing market here is heavily tied to the oil industry, making it one of the most volatile markets in Texas. During the pandemic, a combination of high oil prices and remote work demand sent the median home price skyrocketing to over $320,000. But now, with oil prices stabilizing and drilling activity slowing down, the boom has turned into a bust. Many of the workers who moved in during the oil surge are leaving behind an oversupply of homes. Midland's economy is highly undiversified, and that's a big problem. Unlike cities like Austin or Dallas that have tech and finance to fall back on, Midland is almost completely dependent on energy. When the oil field jobs dry up, so do local businesses, from restaurants to retail. That means fewer people to buy homes, and more listings sitting on the market. Cost of living is another concern. While housing used to be relatively affordable, Midland saw massive price hikes during the last boom. Now, wages aren't keeping up, and buyers are hesitant to overpay in a city that doesn't offer long-term economic stability. Add in limited amenities, high summer temperatures, and a lack of entertainment options, and Midland struggles to compete with larger Texas metros. For anyone thinking about buying a home here, the risks far outweigh the rewards, especially if oil prices dip further. Del Rio, located on the western edge of Texas, along the U.S.-Mexico border, is a city facing significant challenges that have contributed to a steady population decline. Once a vibrant hub for border commerce and tourism, Del Rio's appeal has diminished in recent years due to economic stagnation, limited job opportunities, and ongoing infrastructure issues. In 2025, Del Rio's population is estimated to be just over 30,000, down from a peak in the early 2000s. The city's economy has historically depended on military presence at Laughlin Air Force Base and border trade, but cuts to defense spending and shifts in trade patterns have left local businesses struggling. Retail and service sectors have seen closures, and unemployment rates consistently remain higher than the Texas average. Housing prices have softened significantly. The median home price hovers around $150,000, well below the state average. While this may sound affordable, it reflects weak demand and limited buyer interest. Many homes remain vacant for months or years, contributing to neighborhood decline and a sense of economic malaise. Public services in Del Rio have felt the strain. Aging infrastructure, roads, utilities, and public facilities requires upgrades that the city budget struggles to afford. Schools have faced funding shortfalls, impacting educational quality and driving families to look elsewhere for better options. Additionally, healthcare access is limited, with few local specialists and long wait times for treatment. Safety concerns have risen as well. While Del Rio isn't among the most dangerous Texas cities, recent increases in property crimes and drug-related incidents have unsettled residents and potential newcomers alike. Combined, these factors have caused many longtime residents to leave and deterred newcomers, leading to a steady population drop. Without significant investment in economic diversification and infrastructure, Del Rio's downward trend looks set to continue well beyond 2025. Victoria, located between Houston and Corpus Christi, has long been a regional hub for oil, agriculture, and manufacturing. But in 2025, it's a city that's quietly losing residents, fitting the pattern of Texas towns struggling to keep people from leaving. Its population has slipped to just under 65,000, reflecting the broader challenges facing this community. Victoria's economy is heavily tied to oil and manufacturing, industries that have faced serious downturns in recent years. Job losses in these sectors have hit families hard, and attempts to diversify into healthcare and education have yet to provide enough new opportunities. This economic stagnation is a key reason many are choosing to move elsewhere, chasing better prospects in bigger cities. While housing prices remain low, with median home prices around $180,000, the market is far from booming. Many homes stay on the market for months, signaling weak demand and a lack of buyer interest. For many, this reflects a city losing its appeal and momentum. Victoria's steady population decline and stagnant housing market make it one of the Texas cities no one wants to live in come 2025. Unless significant economic and community investments occur soon, this city is likely to continue emptying out, leaving homebuyers with limited upside and rising risks. Like this video? Subscribe and click the video on the screen to learn more about emptying cities across the United States.